Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is October the 4th, 2019, and this is the Daily Report for Gold and Silver, our weekend review. And today was really a non-event, although we had some quite interesting activity during the week. First, we hit the lowest trading point in terms of pricing since the correction, and immediately following that, we actually got some concrete technical evidence that the correction had concluded. We did initiate a long position. We'll talk about that in detail, along with our exit strategy and stop when we pull up our technical studies. But first, let's take a look at current pricing for Friday, October the 4th. Even with a tepid jobs report, analysts did estimate 145,000 jobs being added. Actual number was 136,000 jobs added last month. That is a fairly tepid or small number, a modest number. At the same time, the unemployment rate dropped from 3.7 to 3.5. Expectations would be that they remain the same. Nonetheless, we did see gold sell off a little bit, trading down about $3.50 and closing at $1,510.30. We did enter a long trade earlier this week. We are in at 1506. We'll talk about that in detail when we pull up our technical studies. Silver also lost ground, closing at $17.60 after factoring in a decline of about 8 cents on the day. Interestingly, it was a very neutral U.S. dollar that had neither a bullish nor bearish effect on the market, but the Dow Jones Industrial Average really took off strongly, and now it's been under pressure, so even a tepid jobs report was enough to move it up almost a full 1.5%, up 372 points at 26,573. Let's take a look at our current technical studies and talk about the trade we put on this week. The first chart that I do want to look at today is a weekly candlestick chart. And the first thing that we do notice is, although it was extremely modest, we did see gold score a gain on the week. That is indicative of a green candle. Simply means that it closed on Friday higher than the open on Monday. The other thing that is interesting is we had a fairly wide range in terms of where it traded on highs and lows. You can see that during the week it hit the lowest trading point since the correction started. Of course, the correction that I'm looking at began roughly at 1565 as we went down, and it occurred over a period of 6 weeks. That being said, we did get an indication that the market had bottomed immediately following this low. This low came in on Tuesday, and then we had higher trading days both Wednesday and Thursday, and this moderate decline today. The best way to look at it is to look at it through the eyes of a daily chart. But before I do that, what I do want to look at is the big picture and our major Elliott wave count. There is a very high probability that we have concluded our fourth wave, the corrective wave, and have now entered an impulse wave, wave number 5. And the way that I'm looking at it is our first rally up basically took us from, call it 1170 to 1350. From there, we retrace back down to about, call it 1290. So this would be our wave 2 right in here. And then we had a $300 rally, dynamic and strong, taking gold pricing from about, say, 1265 to 1565. And that is impressive. But as soon as it hit this top, again, this is a weekly, we then saw a couple of weeks after that in which it traded to a lower low, attempted to stabilize, and then this extreme low, which came in this week. Now, as I said, you'll really get an indication that we probably concluded that fourth wave when we take a look at our daily chart. And what is really clear on our daily chart is the pivot, a key reversal that occurred as this market came down, and then on Tuesday hit the lowest trading point since the correction. That would be this green candle here, and it did recover quite nicely on that day. That was followed by 2 trading days in which we had higher pricing. But what was interesting is that we broke below our 50-day moving average about a week ago, and then this last move up took us back above the 50-day moving average on Wednesday, and for the remaining 2 days of the week, meaning Thursday and Friday, it remained above that price point. So we did initiate a long position. Traders taking that call, we got in at 1506. Oddly enough, that is the same price point we entered our last trade. However, on this stop, we looked at it a little differently. We put it on Wednesday, and we looked at this low that came in at approximately 1480 and put our stop at 1478.13. In terms of our absolute target and exit strategy, there's a couple of things I'm looking at, but my first real level that I think is highly achievable is going to be 1540. Because what we're looking at is, if in fact we are correct and we have now entered a fifth wave, it becomes quite easy to actually go ahead and predict where the outcome or final top will occur on that fifth wave. And there's basically two techniques that we use to do that kind of forecasting. The first one is we look at our wave 1, and we assume that wave 1 and wave 5 are about equal. And so we do a fib extension of this rally here, and then we put our starting point right here at the end of the correction. The second technique that we use is to use a third wave extension. And in this case, we look at the entire length of the third wave, and then we multiply it or extend it by 0.618%. Now, here's what I find extremely fascinating. I have seen this a few times, but it is a very rare occurrence. The two numbers that we are looking at up here are the sum of those extensions. In other words, a 1-to-1 extension of wave 1 takes gold pricing at its conclusion to 1646.50. That's right here. When we do a 0.618 extension of wave 3, the number we come up with is 1645.80. We are talking about numbers that are within dollars of each other, and we can truly say that in terms of these extensions, we absolutely have a Fibonacci harmonics. And traders, a quick announcement. I am extremely excited that I will be part of a Gold Talk seminar. This is going to be held in Malaysia, Kuala Lumpur. It will take place on Saturday, October the 26th, 2019, from 10 to 5 p.m. There will be two other speakers, including myself, Nicholas Tan, as well as Fred Tam, both highly regarded as the top technical analysts in Malaysia. For those of you that are in Kuala Lumpur or Malaysia or Singapore and want to attend, you would want to contact the F1 Academy of Technical Analysis, SDN, BHD. This has been Gary Wagner, wishing you as always good trading. Hope to see you in Kuala Lumpur at the end of the month. Have a great weekend. Bye-bye.